Good morning, ladies and gentlemen. Welcome to the Q1 FY23 results conference call of AVRO India Limited, hosted by Kiran Advisors Private Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Vastupal Shah from Kiran Advisors Private Limited. Thank you, and over to you, sir.
Thank you. Good morning, everyone. I would like to welcome Mr. Sushil Kumar Agarwal, Chairman of AVRO India Limited, to give you a brief about the Q1 FY23 results and quarter development. Sushil sir, over to you, sir.
Thank you very much, Vastu. And hello, everyone, and good morning. And I trust all of you are in absolutely fantastic, great health. I welcome you all for the first quarter FY23 conference call. AVRO India Limited is one of the largest manufacturers of quality molded plastic furniture in northern India and amongst the top 5 brands in the country. The product portfolio, the company includes household and office wear molded furniture, chairs, tables, stools, almirah, and various products of this kind. The products of the company are mainly known for its quality and durability, along with the long-term guarantee. We are the only company to offer 3 years guarantee on lots of our products. This has propelled the growth of its 2 established brands, AVRO and A1, AVON. The company has one of the largest product range with more than 100 SKUs and strong sales distribution system to 20,000 retail outlets across India, with online presence on Flipkart, Amazon, Snapdeal, Pepperfry, IndiaMart, Meesho, Jio, etc. And I think we are probably the largest on Amazon and Flipkart put together in terms of the sales. The quarter of the company has expanded its offline distribution to pan-India basis, and we are progressing today and moving towards pan-India in terms of, let's say, right from reaching to Bangalore, to Kerala, to Bhuj, to Guwahati, to Kashmir, to Assam. Everywhere we are reaching out. So your company is keen on business growth and expansion. The company is looking to expand its product portfolio by introducing new furniture mold in the current year. We have already got 3 molds this year. We're getting another 4 molds by this FY23 itself. And we'll continue to get such molds, which means we take the product leadership by introducing latest new designs, and that's how we are probably the front runner in the industry. It is also evaluating the outsourcing opportunity to expand business product portfolio and regional presence. The new product to be launched are almirah, steel almirah, revolving chairs of various kinds, imported furniture which are imported from China and that kind of thing, and even mattresses for that matter, because we have the existing infrastructure. We can piggyback on the online and offline distribution model that we already have. And the same distributors sell all these products and they keep them. And they have been asking for quite some time, Mr. Agarwal, why do you please give them these products, or give us these products also, because it helps them to get everything sourced from one single source. So we are trying to do that, and we will keep you posted about the new launches from time to time. We are among the 5 leading companies in the molded furniture in the India markets. We are equally focused on environment safety. In this regard, as I mentioned in my Q4 FY22 Concall, we are setting up a recycling unit to produce granules from post-consumer and post-industrial plastics. It is estimated that each use of kilo of the regenerated plastic leads to a saving of 2.5 kg of greenhouse gases emission, which contributes towards climate change. The company is supporting circular economy by creating sustainable business model by collection, upcycling, and making final products of HDPE, LDPE, and PP plastic, which are some of the highest used plastic in India for self-consumption and commercial sales. It is estimated that these 3 items itself constitutes about 66% of the use of plastic across globe, and especially in India. So we have a huge, let's say, availability of such products. The company, by using in-house innovation, has started using post-consumer industrial plastic and has already crossed more than 300 metric tons of regenerated polymer manufacturing by outsourcing in the first quarter of financial year 2022-23, which it will gradually scale up to. We will scale up to 500 metric ton per month in FY23 and thereafter further also. The plan is to meet major annual requirement of polymer during FY22-23 and beyond by regeneration and upcycling. This is our step in making AVRO India a green company and something which is compliant in terms of ESG. Recycled granules are 30% cheaper per kilo, contributing to significant cost saving and improvement in profits, and that will rise on the basis of consumption, which is estimated to be the 70% of entire production of AVRO as we go along. Hence, production is being scaled up for upcycling. So we are in the process of building the capacity so that 70% of our consumption can be in-house produced. So let me take you to the financial performance of the company. For Q1 FY23, revenues reported a 67.3% growth to 20.31 crores. EBITDA came at 2.17 crores as against just 9 lakh rupees in corresponding year, and which happened due to COVID those days. EBITDA margin improved substantially to 10.68%. Net profit was 1.04 crores as against net loss of 36 lakhs. And net profit margin 5.12%. So now I open the floor for Q&A. Please go ahead. Thank you very much.
Thank you. Ladies and gentlemen, we will now begin with the question and answer session. Anyone wishing to ask a question may please press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is on the line of Sandeep Mani, an individual investor. Please go ahead.
Hello.
Yes, good morning, Mr. Sandeep.
Yeah, good morning. Good morning, sir. Sir, I want to just tell you, what is the return of assets, ROE, and return of equity, return on equity, ROE? Can you see? Hello?
Return of equity, Sandeep.
Yes, sir.
I think I can say that we are having an EPS of about 1.03 on this quarter one.
Yeah.
So possibly I can get this data to you. I'm extremely sorry. Right now I don't have it in front of me.
No issue, sir. No issue.
Yeah.
So my second question is, how much debt to equity ratios?
Debt to equity, we are, I think our debt is very low, as I know it's about, let's say long-term debt is about 1.5 crores and we have a CC limit. So I would say that, it is less than 0.8% of debt to equity.
Okay. And how much company's inventory turnover ratio and sales growth? Inventory turnover ratio is pretty high. We are more than 24 times in terms of inventory. And second question you asked was turnover? Sales growth. Sales growth. Sales growth, of course, we have some amount of sales growth from the, let's say, last quarter, which is 18.3 crores to 20.24 crores. And, these first and second quarter are a little subdued because what happens, there are no festivals, etc. But I believe Q3 and Q4 onwards, the traction picks up, and even otherwise, the economy is opening up in the entire country, and probably the scare of COVID is gone. The commodity prices are smoothing up. So we believe and assume that this year will be a little different and stellar year than what we had been posting in the previous years. Okay. So, which will be your best quarter? Q3 and Q4 will be the best because that is a festive time where the offtake picks up dramatically, and even otherwise, what is happening is two things. Very good things that are happening is, Mr. Sandeep, that number one, we are expanding our footprint across country. We are in the let's say process of acquiring about 50 odd distributors across country, of which about 10 have already been onboarded, and 40 are likely to be onboarded in the next 2 to 3 months. So that is one thing that will have an advantage. Plus, as I said, because recycling or upcycling that we have been doing is doing great, and we have gone through the entire nitty-gritties, and we're in the process of setting up a brand new plant for this. So whereby we assume that, once we start this entire thing with 500 metric ton going up to about 1,000 tons per month, we are assuming that bottom line will grow substantially. So these two good things will happen. That will get reflected in Q3 and Q4.
Okay. What kind of demand you should see from next 3 quarters?
What kind of
demand you should see from next 3 quarters?
It will become very, very good, Mr. Sandeep, because for the reason, as I said, we will be also very aggressive on the pricing, because since we have a deep pockets in terms of bottom line growth because of the 30% cost and reduction of the raw material that we'll be consuming or we'll be manufacturing, that will give us a leverage to actually become very predatory pricing or aggressive in terms of market. So once we are able to do that, because we have a huge product range, I've been in existence for 20 years in this industry. I'm also national president of Furniture Manufacturers Association. So across India, I know who are sitting, what is their strength, how far they can go, because there are a lot of regional specific players. So what is happening is in the periphery of 300-500 kilometers that they operate in, they do not want to venture out. But probably we are one of the rare companies which has now taken a big leap, and right from Kashmir to Kanyakumari, we're reaching out even Bhuj to Assam, Guwahati, we're reaching out to almost every sector of the country. And by doing so, we believe that not only the demand that persisted, that continued, that we had from our existing customers, these new customers that we are onboarding should bring in additional sales volume, which is a virgin territory which had not been explored in the past. So that should really give us a great amount of push.
Okay, sir. Sir, one more question.
Yes.
As you speak about recycling, when we can expect the same to start?
Sorry, you said what do you expect out of recycling?
Yeah.
No, out of recycling, it's an upcycling. I will not call it recycling. I will start calling it upcycling, because we are regenerating polymer, and that will help the community to bolster not only in terms of eco-saving that we're talking about, but in terms of profitability also. And another best part, Mr. Sandeep, here is that because the Indian market is pretty wide and huge, 6 million tons of plastics is available. No, not many people have the scientific way of producing and manufacturing that, but we are following the entire norms of the ETP as well as the pollution control boards, etc., creating a green economy. And not only we will be consuming, but we will also be able to sell this kind of product to other companies. We are actually in the same domain and same forte and manufacturing similar product range at a reasonable price so that they can buy from us. That is one sector that we are looking at. Plus, we are also looking at servicing the domestic and MNC companies who are looking for EPR benefit, because come what may, as per the government guidelines, extended producer responsibility that they have, the onus is on them to procure 100% of the plastic that they consume. It could be Dabur, it could be ITC, it could be anybody for that matter. In the 3 years, they have to procure in recycling. Now, unfortunately, they do not have many people who can offer them that quality product, and they are forced to pay penalties on that. So we have a great opportunity in terms of not only doing self-consumption, selling to some companies or companies of similar nature that we are into, and also be able to service the EPR companies for the requirement. So we see a great opportunity coming from that standpoint of view.
Okay. So one more. When can production will start, and what will be capex needed?
Right now, what we are doing, Sandeep, is that whatever capex is required, we are doing it through internal accrual with a certain amount of debt exposure, which we have an access from the bank because we're a little low on the debt. Long-term debt is only 1.5 crores. And we know our bankers are very more than happy to extend us wherever necessary. So this capex will go into manufacturing this backward, which is, the integrated process that we're talking about, upcycling. We'll do that. We already are in the, let's say, forward in terms of the product category and SKU that we're increasing. As I said, we are in the leadership and running position, because right now, the amount of molds and design that I'm introducing or this AVRO is introducing, not many companies in the country are introducing, which might be little large and small also. So that is giving us an edge. So what is happening is we are firing our all cylinders on both the front. right from the forward integration in terms of the product enhancement as well as the backward integration. So this should certainly give us an edge, and we believe that the entire result FY23 and FY24 will see a very different company altogether.
Okay. Okay. Thank you, sir.
Thank you, Mr. Sandeep.
Thank you.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. The next question is on the line of Nilesh Karani from Magnum Equity Broking Limited. Please go ahead.
Yeah, good morning. I'm audible?
Very, very good morning, Mr. Nilesh. You are audible, sir.
Yeah, thank you, sir. Sir, only this upcycle, my question is on upcycle, this thing, recycling upcycle. Basically, sir, what you see, down the line, if I talk about 2023 FY, okay,
Right.
so probably how much, percentage would be our this recycle business, like upcycle business?
Yes, Mr. Nilesh. As I said, whatever consumption we do, we are expecting and assuming that we will scale it up to 70% of self-consumption, self-production, which we should be able to do that. So we are looking forward to that to meet our first our own personal demand, company's demand, and mitigate the cost. That is one thing. And then, once we are able to scale it up further, as I was just telling Mr. Sandeep, on the basis of the capex that we are investing, so that we will be able to also sell to other companies also. So we are looking forward for this.
Okay. And sir, basically now furniture, our UP market, I think we have a stronghold. But now rest of India, how we are growing? Can you just elaborate on that?
Incidentally, Mr. Nilesh, it's a good thing that you asked. We have one company, more than 28 designs registered with us, which is very rare in the entire Indian continent for that matter. Because not many companies actually pay attention to designing, but we do a lot of designing ourselves. And that is how we have this registered design from Government of India. Now, by the virtue of that, the product exclusivity that we have, none of these other companies have. So wherever we go, we get a huge welcome reception. Let's say, for example, Mumbai and Virar, we have a distributor now. We are setting up in Mumbai again. We have started selling in Kerala. We started in Bangalore. We're in Metro AG stores across India. And everywhere, consumers are lapping up our product, and it's a B2B model. So in a B2B space also, we're getting great response. So I believe that, because of the product leadership and the design capability that we have, and very interesting, I wanted to share this, probably I forgot to share, that we are also 40% cheaper than national brands. You can go online and check everything on Flipkart and Amazon. We are the only company probably which has got the highest ranking and rating in the product category of all kinds of product category on Amazon and Flipkart at this point.
So again, sir, I'll come to that same question. Like, see, for example, now UP is how much percentage of our market right now, and rest of India is how much percentage? Can you just...
Yeah, right now we are doing about 70% Uttar Pradesh because that's our domestic home market, and we are absolutely embedded in this market for past 2 decades. And 30% came from other states of northern India, right from Delhi, Haryana, Punjab, Himachal, J&K, Uttarakhand, Rajasthan, etc. Now we are expanding more onto Gujarat as well as Madhya Pradesh, Bihar, Chhattisgarh, even Odisha and Jharkhand. Plus we are also going towards southern India in terms of the other states, Maharashtra including. So we believe that over a period of time, my assumption is that 50% will be Uttar Pradesh or, let's say UP home market, and 50% should come from other areas.
Okay. And sir, as we discussed in the last call, basically you were planning to set up something in South, correct? Another factory or some warehousing type or something. So the plans are on, or how it is going on?
Yeah, that's absolutely true, Mr. Nilesh. Number one, we are not planning to set up factory as such right now, but in the first step, we will certainly set up warehouses, facilities wherever necessary to reach out to consumer. For example, today on Flipkart and Amazon, our major buyers are from South India. So we've been requested by these companies, why don't we set up a warehouse? We said, all right, let the traction take place, because right now we're selling more than 10 crore rupees worth of plastic furniture online, and we believe that over a period of time, on the basis of the increase in the sales volume, etc., we should be able to set up warehouses wherever necessary to facilitate and make it easy to reach out to consumer very, very fast, which we are anyway doing at this point in time also. But that would certainly benefit our small-time retailers as well as distributors who can take small consignments from us, which we are in the process of setting up over a period of time.
Okay, so can you elaborate on any time frame, like how much time it will take to?
It is demand driven, Mr. Nilesh. We are very much open. Let's say if it comes to warehouses or collection centers, etc., across India, it is absolutely easy and fine for us to do so. At some point, we were contemplating that we can set it up into Jaipur, Ludhiana, Ahmedabad, etc., or Bhopal. Then we started realizing that there's no point in setting up there because these people are buying entire material on truckload basis. They do not want small consignment. So if at all, even if we gave a storage house and they do not want to buy metal from there, it will become useless activity. Instead of that, we will set up this particular facility where we believe that we can't feature very fast. So we're in the process of evaluating that. As and when it happens, wherever demand comes in, we already have GST registration in Bangalore. We also have in Rajasthan and a couple of other places. We are in the process of doing that, and we will continue to do that, ramp it up as much as possible.
Okay. Sir, if I ask you, see, this is a little bit data point question, but if I ask you, if we put together your upcycle business in 23 and your existing business, so what kind of growth we are looking?
Sorry, yeah. What's your question in that?
Sir, if we look at our upcycle business and our existing business, which is growing, okay. So total, like, how do you see your 23 panning out? Like, what would be our roughly? What would be?
Mr. Nilesh, first and foremost, let's say furniture. We assume and believe we have been growing at a rate of about 20-25% or so. But we'll certainly modify that figure and take it to about 40% is what we are assuming. Number one, in terms of the product growth or the sales of the product is concerned. And while we are doing that, because this upcycling that we are doing will actually be for self-consumption initially, but we'll also be able to sell that. So while what we are doing is, in the first phase, we are setting up a project for 1,000 tons. But in the second phase, once we are a little comfortable in terms of cash flow, etc., and we are able to manage our funds to a certain extent, we'll set up a greenfield plant, which will be exclusively manufacture upcycling products, and that should be a little larger project. So then you should be able to see the benefits accruing out of that sales in the FY24.
Okay, got it. So basically, if I say blended margins will go up by nearly 30-40% in 23 and probably more than that in 24.
I will not directly relate and say because the cost of raw material is going down by 30% that we should be able to do that, because progressively, as and when you progress to manufacturing and increase the volume, it will certainly help us and benefit a lot. But direct benefit of 30% on the entire sales may not be there, because 30% we are anyway going to source from outside sources. And besides, once we are trying to scale it up, there will be certain amount of direct and indirect expenses that will get entailed. But nevertheless, the possible results will be much better and different than what we have been posting these days.
Okay. And one more question is, sir, regarding crude. Basically, if the crude is probably coming down to 80 level or 75 level and settling there around, so can we see our profitability going higher?
Can we see? Sorry, I missed your...
Sorry. Can you see our profitability coming?
You said 70-80 level crude, yes. Next is?
Yeah, so it will impact our profitability, correct? We will have more margins on profitability side, correct?
Yeah, incidentally, you're absolutely right. What happens when the crude goes down? Naturally, the polymer prices in the virgin territory also goes down. Similarly, let's say the post-consumer, post-industrial also goes down to that extent, but not greatly. Let's say if the virgin plastic is going down by 1 rupee, this will be about 50 paisa, because it doesn't directly impact. And same way, when it goes up also, it doesn't impact us much. Let's say if there's a 20 rupees rise in the increase in the prices of virgin polymer, in the upcycling, it will be about 10 rupees only, not even 10 rupees, 7-8 rupees only. So that is a benefit and beauty we get. And very interestingly, Mr. Nilesh, I'd like to share that because people do not have scientific manufacturing facilities, they are unable to procure and use that metal which is abundantly available across India for a very, very low price. And interestingly, not many people who are actually doing upcycling are able to meet that particular criteria from the standpoint that whatever shoddy or the shady way that they are doing is not the right way. Because today PMO and Honorable Government of India is promoting this recycling, upcycling in a very, very big way. So it's a big time for us to take a big leap of faith, and we have already done that.
Okay. Thank you for this from our side. Thank you so much, sir.
Thank you, Mr. Nilesh.
Thank you. The next question is from the line of Avinash Gorak from Profit Market. Please go ahead.
Yeah, good morning, everybody, and congratulations for a very good set of numbers. I have two questions. One is, can you tell us what has been the improvement in the working capital cycle? Because this business is largely working capital intensive. So going forward in the coming financial year, do you expect some sort of reasonable working capital kind of reduction so that, that would aid your operating cash flows?
Yeah.
And secondly, in terms of the new products, any new products the company is planning to launch, some new designs or maybe some new product categories, if you could give us some color on that.
Right. Fantastic question, Mr. Avinash. Thank you very much for this. When it comes to working capital cycle, actually last year we extended a lot of credits to our buyers just because they were going through a huge COVID challenge. And now in this year we'll do consolidation and that cycle should come down. So I believe that, debtors would certainly be brought into the, let's say, reasonable level that we were actually operating in earlier. So that is one thing. Besides, the additional cash flow that we will generate will help us in mitigating if at all there is any capital need comes in, we'll be able to take care of that. That will suffice. And when it comes to new products, yes, as I said, we already introduced 3 molds this year. We are in the process of introducing the 4 molds that I'm talking about are almost ready and on the way. So this year we will be able to do. Not only that, as we were just mentioning, that revolving chairs is one thing which we are looking forward to. We have already started, let's say, sourcing, plus certain trials are happening, and we believe that by Q3 or Q4, that should see a certain amount of sales growth happening from that area. Plus steel almirah we have already been doing in a cold start, but now this year will become a little hot on that. We will start amplifying that business model. We are also looking at mattresses because mattress is a reasonably big size market today. But we do not want to manufacture it, but we will get it branded in our own company brand and start selling through offline and online. So these are a couple of changes that we are looking forward to in terms of the product expansion, in terms of the market distribution expansion, and upcycling also. These 3 areas we're looking at.
So I think I just wanted one more clarification. The mattress product will be outsourced, right? It will not be manufactured by the company.
Absolutely, absolutely.
So, hopefully, when can we expect, this product to be launched in the market? I mean, can we expect that, say, after financial year, second half of FY23, or all these products which you mentioned would come, and reflect in revenue numbers in FY24? If you could just, give us some idea.
I think FY24 should be a very safe to say so because what happens, we become aspirational. And it's absolutely nothing wrong in being aspirational. But sometimes, things don't go the way we want it. There are many people who are ready to more than happy and willing to partner with us and give us the product. But nevertheless, we are scouting for the best one. We are also looking at the right time opportunity in terms of, reaching out and probably expanding or, maybe start the distribution of the product category. And we're also on lookout for certain resources in terms of manpower or certain deployment so that we can actually effectively do that. We do not want to do a start where we are not reaching out, we are not able to scale up. So we're in the process of evaluating, and because we're little, let's say, tight in terms of, because the distribution is being expanded, the upcycling is happening. So entire team seems to be reasonably busy, but certainly we will take it up to the next level. The moment, we are able to one by one complete all these projects and aspiration, we'll certainly take it forward.
One last question. You mentioned a lot about upcycling, which is basically, a more refined word for recycling. Tell me one thing, for doing this upcycling, do you require any kind of specific technology or that has been developed in-house by, the company? Because, you said that the quality of the product which finally comes out matters a lot, So upcycling is definitely got to do with a lot of precision and, quality. So for the technology part, does it involve some basic technology or is it a very simple process to, recycle, upcycle and actually use the polymer?
You certainly said it's a very simple process also. That is the right way to say so. But it also has certain nitty-gritties. What happens, just converting post-industrial waste or plastic into pallets or granules is the most easiest job to do so. But post-consumer, to take that and to segregate and also do a washing as well as treating that particular product to make it, let's say, usable for non-food product or in the furniture category without compromising the quality or the color or strength is the biggest challenge. And that is where our expertise comes in. Because in the 2 decades of our experience in this line of activity, we understand this recipe reasonably well. We know what is it that needs to be mixed or what is it needs to be fixed in terms of creating a product quality which does not compromise the customer's aspiration. And maybe, over a period of time, when we are going forward in terms of online and offline, we can't be saying there is a certain return or reverse in terms of the growth that we are looking at. So we are very cautious, we are conscious, and we are now building the technology in terms of, let's say, we are deploying a fantastic digital technology to ensure that the value stream or the entire chain of upcycling is mapped beautifully well. And we are also in the process of acquiring technology which will have a blockchain, probably right from the way product at the source till the time of disposal, where and how it has happened. So we're in the process of doing that. So the idea here would be, when we deploy these kind of processes and technology, we'll be definitely far ahead of others. We'll be able to not only sustain, but we'll be able to scale it up also.
Okay, I think thank you very much and all the best for you in your.
Thank you, Mr. Avinash.
Thank you. A reminder to the participants, anyone wishing to ask a question may please press star and 1. The next question is from the line of Kuber Chauhan from IDBI Capital. Please go ahead.
Yeah, thank you for taking the question. Am I audible?
Yes, you are, Mr. Kuber. Thank you very much. Good morning. Please come along.
Yeah, good morning. Yeah, sir. Just wanted to know that have you taken any price hike during this quarter to mitigate the inflationary pressure?
Price hit?
How much you can quantify that?
Are you saying we are taking the price hit?
Price hike.
Price hike of the final product or the raw material increase?
Both.
There have been a certain amount of increase in the selling prices that we were selling earlier, about 6% or so. But okay. I think it's the price increase of the raw material went up drastically because of this particular, let's say, supply chain management disruption as well as the war. So that actually, it got escalated overnight. But in spite of that, by virtue of our, let's say, certain intelligence that we have in terms of creating recipes, we will to still sustain. But I'm sure as and when it is easing now, over a period of time, let's say the commodity prices, availability as well as supply chain management, we believe we believe that we should be able to cruise ahead with a great amount of plans and sustainability and scalability, or in terms of, let's say, creating that particular numbers that we're looking at, we should be able to achieve that. We did have a hit on that.
Okay. And second question is on the, if you looking at the next few quarters, so how do you look at it? Is it something, uncertain still, or to be confident about it?
Profitability?
Yeah.
No, we are very confident, Mr. Kuber, from a simple standpoint of view, that the business we are into, we've been doing for 2 decades. We understand the product category and integrity pretty well in terms of deep distribution, etc. And product leadership that we've taken, 3 years guarantee, 40% cheaper price, online offline presence, 20,000 retailers, so on and so forth. These are a couple of our strengths. So I believe once we are in the progressive stage at this point of time, and we're expanding our footprint, plus also doing upcycling, we are hitting on all fronts. We're ensuring that we take care of, let's say, all the avenues and areas where we can bolster our top line and bottom line both. So we are doing as much as possible. So I don't really see any risk happening as such per se. And even otherwise, I'd like to share this with all my friends that today plastic furniture per se is not damaging environment. We are saving environment. Had not been the plastic furniture of about $1 billion industry, I am assuming and believing that how much amount of wood would have gone into the, let's say, the manufacturing of furniture. But instead of that, and not only that, 5 to 6 times this gets recycled, and later on it gets used into making of roads also. So in a way, we don't believe that there is any risk for that matter. And even otherwise, it's a sunrise industry. It is growing at the rate of 15% organically year on year. And because of our expansion and distribution, and we will also start certain branding activity, we believe that we will cannibalize on other companies' brands also. So that should give us a great leverage and strength.
Hello.
Have I been able to answer you, Mr. Kuber?
Yeah, last was a bit inaudible, but I the gist of it. The next question is on how do you, if you can just quantify regarding our order book.
Order book, interestingly, our order book is so smart that, we almost deliver in 24 hours to 48 hours every time orders. So we don't keep pending, because the moment we keep it pending, then the distributors would go over to other companies. We do not want that to happen. So our strength lies in the fact that, the moment the order is placed, less than 24 hours we dispatch. So we don't keep an order book of 2 to 3 months.
Okay. Okay. Actually, sir, can you just quantify regarding the numbers of FY23 in terms of in terms of numbers, like how do you look at volume growth and top line growth? Is there any ballpark number if you can just give me or quantify it?
Thank you, Mr. Kuber. I will not be able to tell you ballpark, but I'll just give you a small idea that, let's say, for example, the distribution that we're expanding and plus the branding that we're doing, I believe that we should be able to grow about 30 to 40% is my take at this point. Unless otherwise something unwarranted happens. So the top line that we had. And correspondingly, naturally, the bottom line also will grow because we're doing upcycling.
Okay. Okay. You are saying 30% on YOY basis, right?
Yeah, YY.
Okay. 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 So that's it from my side. Thank you and all the best for your future, sir.
Thank you, Mr. Kuber. Thank you very much.
Yeah.
Thank you. The next question is from the line of Devang Baldeja, an individual investor. Please go ahead.
Yes, sir. Congrats on the good Q1 numbers. Sir, I wanted to ask about your profitability. So in quarter 4, we did around 14% EBITDA margins. In Q1, we have done around 10.5. So what was the reason for this dip?
Yeah, of course. There were certain amount of, let's say, sale of plastic compounds also in this particular quarter, which was not there in the Q4 of FY22. So that is how I think the profitability on the sale is little less, whereas vis-a-vis manufacturing. So that is how there is a certain amount of drop in the profitability this quarter. But I'm sure over a period of time, as I was just mentioning, that since we are starting with this upcycling, we believe that over a period of time that should constitute a reasonably major amount of benefit, and the bottom line will certainly grow. In the Q3 and Q4 will be very different.
Then in the last call also you had mentioned about this polypropylene bags which usually go to the kabadis, and then you had the idea of using this as a raw material, and that this will lead to a reduction in your raw material cost and so on.
Right.
So, and now also we are saying the same thing. So is there some time gap between when this idea comes and how long it takes to implement something?
No. Last time when I mentioned it was not too long. We were in the process of building it up and we already done that. And as we sent message that 300 metric ton has already been generated. Now we are scaling up that to not 300 metric ton in a quarter, but 500 metric ton in a month. So once this amplification becomes easy, because sometimes what happens, there are resources constraints right from the technology, machines, to maybe manpower, etc. So once this particular thing, we are sorting out all those nitty-gritties. So we believe sometimes even certain things are not in our hands also. But as much as we know and we understand, because we are reasonably big grip, not only me, my elder son Sahil Agarwal, who's the MD, and another gentleman, another boy called as Nikhil Agarwal, who handles the marketing and sales, etc. So not only three of us, but even my daughter-in-law, whose name is Akshita Agarwal, also takes the branding and communication. So for us, we paid attention to the entire business, and this is the only focus area that we have. So we believe, unless otherwise there are certain vagaries of nature or challenges that we face, beyond that, we are absolutely up and running and ensuring that all this execution happens, because it happens for the good. And if it happens for the benefit of not only the company's growth, but in the stakeholders and shareholders also.
Okay, sir. So like in Q4, we did 14.5 type EBITDA margin, plus with recycling, so we could expect a jump on that level also. So maybe we can do 16-17% EBITDA going ahead, say 2-3 quarters down the line. Is that a fair assumption?
Absolutely. You're absolutely right. Because, we have just done a small consignment now, but, the moment we scale it up, which we are in the process of doing so, and as I was mentioning that we are setting up a greenfield plant for right now at this point of time when we are talking, and I think that should probably happen in the next 4 to 6 months or so. We already have machines procured. It is just that we need to execute it, and we are already doing it in a small way, but to amplify that. And once we have done this, 1,000 tons, then the next step will be 2,000 tons and beyond.
Okay. And sir, like for growth in our business, what is the kind of skill set that we need, or do we need to reach out as much as possible, onboard more and more dealers, enter new geographies, or how does it work? I mean, what are the factors that lead to large growth? Like for FY23, you are saying we can do 30-40% growth. So let's say on a 4-5 year basis,
correct,
what kind of plans do we have, and on profitability also, just a broad rough idea if you could give.
Wonderful, wonderful. Now, what we are doing is, as you rightly said, because my younger son, Nikhil Agarwal, takes care of the entire sales and distribution, so he's got a team of people where he has taken some more people on board. So while doing that, we were not able to reach out to some places which are far-flung. Let's say, for example, Maharashtra, we did not have resources. Or, let's say, South India, we did not have resources. Orissa and all this, we did not have. Now, we're in the process of onboarding a lot of people who are from the same trade itself, who are reasonably aligned with the distributor, know them all, so that it's easy for us to connect with this distributor, brand new distributor, because it takes some time for these people to get onboarded. They're a little insecure, they have anxiety, they don't know whether or not the company will be able to continue or so. But once they're established and feel all right, there is a company in existence for 2 decades and we're doing reasonably well. And as I said, not only being national president of, let's say, Furniture Manufacturers Association, I'm also chairman of CII. So when they see that, the kind of operation that we do, the amount of business that we are doing in a very, let's say, truthful and honest fashion, then that inspires them to get onboarded. So we believe that, the only challenge that we face at this point of time is having certain amount of key resources onboarding so that they can connect with the distributor and we can start selling. That's only small timeline. And sometimes what happens when we're a little small, maybe a lot of companies, which a lot of people from the company, large companies, do not want to even migrate and come on board because they believe we are happy with wherever we are. But once they sort of settle down and they believe, all right, this company has got a great purpose, then they will certainly enjoy. So with the process of onboarding people as much as possible, as fast as possible, and the more we are able to do so, more we will be able to reach out. That's the only challenge.
Okay, sir. And sir, when we reach out to a new distributor, so do we need to extend larger commissions, say, versus a brand like Nilkamal, which is a pan-India and older brand? So
yeah.
Incidentally,
Mr. Devang, our prices are about 40% cheaper than Nilkamal and Supreme or Cello. Normally, I don't mention these names, but nevertheless, because I have a lot of respect for them, they created this industry and they created this product segment and category. So we have a lot of pride in that, saying that, yes, they are the leaders. All right. But nevertheless, today, because of our aggressive predatory pricing plus distribution, plus, let's say, our approach and reach out, we do a lot of conferences at our distributors' place, which not many companies do because they are reasonably big behemoths. So they do not have to do all these things. But we are in the process of actually building this new paradigm of how the distribution model should take place. We not only train distributors, we also train their dealers also. We have a complete, let's say, PPT presentation lasting for 3.5 hours, where we do a lot of interactive work. So these kind of activities, when we do, I'm sure over a period of time, people will certainly love those who have not seen and, let's say, heard us. Will love to get associated over a period of time.
Right. Great, sir, and all the best. Thank you.
Thank you, Mr. Devang. Thank you.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star in 1. The next question is on the line of Apurva Mehta, a retail investor. Please go ahead.
Yeah, hello.
Hi, good morning, Mr. Apurva.
Yeah, good morning. As I understand, your majority business is coming from offline model. So what is the breakup between offline and online sales?
Right now, I believe we should be doing about 15% and odd on online, and rest comes from offline.
Okay. Speaking on the same topic, what is the logistic cost for transporting for large order to deal distributor and single order of online?
Brilliant. We normally pay about, we don't pay, of course, our consumers, our distributor pay every freight that we are ex-factory prices. So we believe that, let's say the region that we operate in, the freight ranges between 5 to 15%. So that's the maximum that, our distributors pay us. But through logistics, when we send through, let's say, Cloudtail, which was the earlier one, now Easy Retail, plus there are other companies also, they pick up the product from us. So we actually don't pay ourselves. They pay for it. And we give them at, let's say, for example, Metro AG or let's say Amazon, Flipkart. We give them the material and they, in turn, take care of the logistics themselves. But I believe that their logistics cost is reasonably high. And that is how, when you see our products' online prices, and you'll be surprised that, online prices versus the distributor prices, there's a huge difference, massive difference. It is just not 10-20%. There are many number of times, let's say if the product cost is 400 rupees, maybe on online it will be for 1100 rupees. So there's a huge, massive difference, and that particular difference is been taken by these large corporate, these e-com companies, as well as the logistics that they have to bear. And the beauty about that is, in spite of that, we still are cheaper on online space with other large companies. And our product, as I was mentioning that, Flipkart, Amazon, if you were to go and check for AVRO furniture, you will find that we have maximum ranking and rating for our products. And they are the most after-sale product. We are, in fact, I would like to say, and I forgot that, right now, Amazon has given a certificate that we are Amazon #1 in the country on terms of online spaces furniture. Last week itself we got it.
Okay. So in online order, is there any minimum order requirements?
We are okay with absolutely 2 pieces chair also, because it's consumer driven. So we don't have any such, let's say if somebody wants one single table or anything, is absolutely fine for us, no problem.
Okay, so how many SKUs we will have online against offline?
We have almost about 20 odd SKUs online, because we don't offer every SKU on online, because there are a couple of low value added products which probably consumer may not pick up. They may probably carry a negative connotation about the company. So on offline distribution model in tier 3, tier 4 city, as low as about 180 rupees to 200 rupees chair also goes. But in online space, people are little conscious and cautious. They want to buy a product which is not only branded, which has got a strength and quality, and even they also don't mind paying certain more price on the basis of, let us say, confidence and the comfort that you get. So the beauty about that is how we kept certain very selected products on the online. And today, as I was mentioning, that's how we've been very popular and successful in that particular business model.
Okay. And which are the best selling products online? Can you give any idea?
Oh yeah, sure. We have a lot of products right now. Double and double five chair, which has got a beautiful chair, 4 kilos. We have Viva table, Nexa table, Magna, Delta. Then we have got 2581, 3581. A lot of models of these products. Baby chair, baby desk, etc. And these, let's say, as I said, 20 odd rescue range that I got. Platinum chair, probably world's only single model that we have. It's a beautiful product, 4 kg. I think, online, if you were to check, probably somewhere in Europe, some company was showing about, let's say, about $100 plus. We are offering for that for as low as about 550 rupees. So the beauty about that is that the products are reasonably good. And as I was mentioning, Mr. Apurva, that couple of the products are proprietary. In terms of, let's say, we are the only company which manufactures that. Nobody else has these molds. We invest a lot on R&D in terms of technology, in terms of designing, etc. And most of these designing, I do it myself.
So what will be the price difference of online, of AVRO, on other big brands?
Yeah, in fact, if you were to see, let's say, for example, if you go and check for, let's say, a Viva table of AVRO, and versus, let's say, the Supreme table, then you will find that there's a difference of about 700-800 rupees, even up to 1,000 rupees also. So that's a huge difference. And not only online, in offline also, their prices and our prices, as I said, 40% cheaper. So that is how we are able to get a great reception and, let's say, a great amount of acceptability wherever we have gone.
Okay. Thank you. That's all from my side.
Thank you, Mr. Apurva.
Yeah. Thank you.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. As there are no further questions, I now hand the conference over to Mr. Vastupal Shah for his closing comments.
Thank you.
Before that, Vastu, I'd like to, Vastu, give me a minute to thank Mr. Sandeep, Mr. Nilesh, Mr. Avinash, Mr. Kober Chauhan, Mr. Devang, Mr. Apurva Mehta, and all other participants for, let's say, supporting us, asking these beautiful questions, because the moment you ask this question, it ignites a passion in our mind. It tells us that this is what investor community or people at large are looking at with a hopeful eyes. So I can assure and say one thing, that we as a company have a purpose. And as a leadership team today, not only me, my entire team of leadership, right from the down the line to the security guy. Everybody has been oriented to ensure and take care of the consumer's choice, because consumer is God in any case, and so the stakeholders and shareholders. So we'll continue to perform as much as possible over a period of time, and as and when we continue to have the internal resources as well as external coming in, whatever means we can. So we believe that we will amplify this business model to a very different level itself altogether. So we are in the process of that. Please keep guiding us. Please keep blessing us. We'll be more than happy to collaborate and work together with all of you. Thank you very much.
Thank you. Thanks everyone for joining the conference call of AVRO India Limited. If you have any queries, you can write us at vastupal@clearingadvisors.com. And once more, thanks to management team and the participants for joining the conference.
Thank you very much. Thank you.
Thank you. Ladies and gentlemen, on behalf of Kiran Advisors Private Limited, that concludes this conference call. We thank you for joining us, and you may now disconnect your lines. Thank you.